All right, today in Hot Picks, we're going to tune out all the other noise in the market and focus on one sector, the food sector. Now, of course, this has been really interesting because they've been big beneficiaries of inflation as they've been able to pass those costs on to consumers. They can be recession-proof because people got to eat, even if there is a slowdown. Of course, there's some nuance to that. Let's bring in Laura Lau, who's Chief Investment Officer at Brompton Funds. Laura, thanks so much for being with us.
Thanks for having me, Amber.
So inflation is a key factor. Sometimes it benefits, sometimes it's hard if you are a buyer of food trying to resell it in a different form to others. How do you think about playing the food sector with this inflation lens?
I think the number one thing is, can these manufacturers pass on the increased costs? So certainly with Ukraine being invaded by Russia, we saw those foods that Russia and Ukraine export, corn, wheat, and oil, food oil, go up in price. And we've actually seen those come down. So they're actually having the benefits of that, where the prices are coming down and they're still able to pass on those costs.
That's a good point, and it makes the sector, I guess, that much more volatile. So with that in mind, let's get to your first pick. Hershey in the U.S., known for chocolate and other sugary confections. What do you like there, and how are they able to navigate this environment?
So what I like about it is they're mostly, of course, chocolate candy and also, salty snacks. So we've seen, even with higher prices, people are still buying candy, chocolate, and salty snacks. They are not willing to give that up. They are addictive.
Yes.
And the other thing we've seen is we're celebrating again. We're celebrating Halloween, Christmas, Valentine's Day, and Easter's coming up. So we're seeing, very good comparable, year-to-year comparables, because people are celebrating and buying chocolate again.
I'm looking at the stock trading at an all-time high, close to an all-time high. Trades, it's more expensive than the broader market. I think it's even now more expensive than Google, but that's a whole conversation. But should you be paying up for it, is the question.
I think what we've seen is the earnings have been very stable. And actually last year, they were not, they had some supply chain issues. So this year, what they're doing is they're expanding production to get rid of those supply chain issues, and they're advertising to build their brands up. So they are reinvesting those brands. So that's why we do expect the growth to continue, and growth has been better than expected.
Okay, now let's go international. You like Tesco as another play on food. Why?
So Tesco, if any of you have been to the UK, it's hard not to see a Tesco. They have almost 5,000 locations, most 80% of them in the UK, anywhere from small convenience stores all the way up to those big super centers. So they have about 27.5% market share, and we've definitely seen a lot of inflation in the UK. And what they have been able to is, again, pass those costs on to consumers. So that's why we do like the stock. The other thing is very, very reasonably priced. In general, UK is one of the cheapest markets in the world, partly because of Brexit, partly because of the pound. But we also, in our portfolios, we hedge the pound. So it doesn't matter to us what the currency does.
What happened with Tesco in 2021? I'm just looking at the chart, and it's this massive plunge down.
Brexit.
I see.
And also there was a lot of concern. We saw a lot of empty shelves in the UK around that time. As I said, with Brexit, there were issues getting food in, higher costs. So there was a lot of uncertainty over that and issues.
And you think they're kind of working through that?
Yes, so they're working through that. And one thing we've seen in Canada is online grocery delivery. They're actually 13% penetration online grocery delivery, and they're actually able to make it work and make a profit. Here, it's still hard to make money on it.
Ajinomoto, which is in Japan, what's the play there?
So what's the play there is basically it is a food seasoner. So if any of you have eaten a Japanese restaurant, I'm sure you've had one of their spices. So they've made umami.
Oh, wow.
Yeah, so they are the makers of umami. That special taste in your mouth that, je ne sais quoi. So what we've seen is, very stable growth there, and they're a big play on Asia. Because Japan is about half the sales, and the other half is Asia. And we're seeing recovery in Asia in general. So that's part of the play, and it's also very reasonably priced. Japan's also a very cheap market.
Yeah, how do you cancel out, or how do you insulate from, what's the Bank of Japan going to do with easy money policy? What's the yen going to do? How do you manage that in your portfolio?
So they're definitely a beneficiary of a cheaper yen.
Yeah.
So that's the other thing. And then again, we do hedge the yen in our portfolios. But as I said, their revenues are improved by a cheaper yen.
And is that something a retail investor can do? Is there a strategy there, or are you kind of out of luck if you want to add an Ajinomoto or Tesco into your portfolio? Are there ways to hedge yourself?
I'm not really sure how they can hedge outside of having, like US dollars is easy.
Yeah.
If they should have a pound account or a yen account.
Okay, that's what they should do.